in about 30 seconds.
I can hear the bell ringing. So,
Yeah,
I mean, if we go by the bell,
Ring the
you
bell.
know, the Carillion bells out here, Jim, we're already behind.
Okay, well, we can start.
Let's start.
We can start when we want to, right?
We do what we want.
All right. Well, welcome everyone to this farmdoc webinar, updated supply, demand, and price prospects for corn and soybeans. It will be presented today by myself, Scott Irwin, and Todd Hubbs. And we want to also welcome Compeer Financial as our sponsor for today's webinar. We greatly appreciate their support. So just a reminder that our presentation materials, the PDF file of the slides, are available in your GoToWebinar control panel, usually over on the right, and you can find our slides. And then the webinar is being archived along with the slides at the webinar location on farmdoc, of which you can see there. And as always, please remember to submit questions during the presentation. We're aiming for about 30 minutes of presentation as usual, but we're not going to guarantee that today. Cannot guarantee that today, given everything we got to get through. But do submit your questions, and we'll get in as much time for questions as we can, because maybe you guys have out there, our listeners, as many questions as we do.
Right.
Okay, let's get going. You know, Todd, usually doing the grain stocks numbers is, one of the simpler parts.
Yeah, I always enjoy that part.
Normally. But, we had, if you remember our last webinar after the September 1st stocks report, that we had a huge usage surprise in corn with the ending stocks being around 300 million bushels lower than it was expected. We thought that was a big surprise. Well, it turns out that the USDA outdid themselves with the D1 corn stocks number. And before I get into those specifics, I do want to note something that we found quite surprising. Was not only did the USDA publish, as usual, a December 1st stocks number, that would be December 1st, 2019, but they also revised upwards the September 1st, 2019 stocks number for corn. So they revised it.
Yeah.
The number that they printed in September, for the first time in my memory, the USDA revised it. We don't know if this is a new methodology they're using or exactly what prompted this, but I went back and looked, and at least for the last decade, I know for certain that in the December stocks report, they did not revise the previous September stocks number. And that is something that we're going to be asking a lot of questions about, because it kind of popped out of the blue. And usually we consider those grain stocks numbers kind of sacrosanct. We know they're not perfect.
Yeah.
They have sampling variability just like any other survey estimates. But the basic methodology that we're used to is you never change the stocks numbers, and then you make everything else fit.
Right.
Hence
the residual.
Yeah, and then you have to deal with residual. But something different happened today, and so we're going to be having that in the background as we go through our comments today. So let's just talk for now about the December 1st corn stocks number. It came out at 11.389 billion bushels versus a trade expectation of 11.511 billion bushels. And on the surface, that's bullish all by itself, because obviously the stocks turned out to be about 130 million bushels less than expected. But that's far from the whole story. And I think the market was really struggling during the session today before to close to kind of figure this out. We're all, I think, struggling to figure out exactly what this means. But rather than being a usage surprise of roughly 120 million bushels, it's actually over a 400 million bushel usage surprise, bullish surprise. All right, you might ask, how in the world do you get that big of a usage surprise? It's accounted for by three things. First is that revision upwards by over 100 million bushels in the September stocks number. So that gives you more supply for the first quarter.
Yep.
The USDA also published a production estimate that was, I believe, about 200 million bushels higher than expected, Todd. Is that right?
Yeah. It was up there. Yeah.
Or not that much?
No, it was about 30 million bushels above the last projection.
Above the last one. But the market expected a downward revision.
Downward revision because they raised yield. Yep.
Yep. So we've got more stocks, more production, and lower DS1 stocks than we expected.
Right.
And you put that combination together, and it implies a phenomenal rate of usage in the first quarter of the marketing year for corn. And it's saying literally, this is, at least you can see, it's the largest bullish surprise in our data files in bushel terms for, going all the way back to the 1980s. And it's certainly the largest one by quite a margin in the 2000s and 2010. So this is, at least on the surface, one of the largest bullish grain stock surprises that we've ever seen.
And December 1st.
On December 1st,
Yeah.
or any month too.
Yeah, that's true.
On a percentage basis, it's almost 9%, and that's one of the biggest ones ever for any month.
Right. And
So any way you measure this, at least on paper, this was a huge bullish shock to the market.
yeah, and that 100+ million bushel revision of the September, that's a huge chunk of it. Right.
Well, there's 400 million, and 100 million is the revision of the
30 million is the production.
and then the rest is the lower stocks compared to what the market expected. You should put it all together, it adds up to 400, a little over 400 million bushels. So that's big. So what does that mean in terms of adjusting usage going forward? So if we take the numbers that the USDA published today as given, as published, first quarter feed and residual use of corn is implied to be over 2.6 billion bushels. 2.6 billion bushels. Compared to, we haven't been above 2.3 billion bushels since 2013-14. So for 6 marketing years, and it's the largest first quarter feed and residual estimate since the beginning of the ethanol era. So it's a huge number, and then we start to face the quandary, and that's what Todd and I have been really scrambling to try to figure out in the last few hours. Well, that's the standard way to compute first quarter feed and residual use, but do you really believe it?
Yeah, no.
I mean, it's so big that it doesn't seem like that's really a feasible number to have actually occurred. Even though we have seen rising livestock inventories, a jump of that magnitude seems too big to really be believed, at least entirely.
Yeah, I mean, even if we took 100 million out of that, it's still.
Yeah, I can take 100 million. It's still 2512. It's still by a long ways the biggest number. And to put that in perspective further, if a standard way to see how we're going in terms of the pace of feed and residual use each year. After the first quarter, you say, okay, in recent years, the first quarter feed and residual use has typically represented, say, we'll start with the bottom number, 43% of overall usage during the marketing year.
Yeah, I think that's about right.
Yeah. And that's about what we've been running in recent years, those other numbers that you saw around 300 on that previous slide. So if our 22.6 billion is 43% of total feed and residual use for corn for the 1920 marketing year, that means total feed and residual use is 6.1 billion bushels. The USDA projection, which they increased by 250 million bushels over where they were standing before, now stands at 55.25.
Yeah.
Maybe the percentage of use, for whatever reason, is higher in the first quarter of the marketing year than we're used to, say 45%. That still only drops total usage to 5804 or 5.8 billion bushels, which is still almost 300 million bushels higher than the revised number that the USDA printed today. So what does this mean? What do we make of this? We find, Todd and I, that the 55.25 seems like a reasonable number to the increase compared to where the USDA was relative to livestock numbers. We don't find any reason to really disagree with that as a projection. But then you're forced to deal with, what are you going to do with all the rest of those bushels that were the usage surprise?
Yeah.
What are you going to do? And it fundamentally means that the USDA's crop production estimate, yield and acreage for 1920, more than likely was too high, or the stocks number was too low. And then we do have to admit that there was a lot of grain in the field. 8% of the acres, as of the survey date, corn acres were in the field. So there's probably more than the usual uncertainty about the on-farm corn stocks number.
Right.
So that could be going on. I think Todd and he'll get into that next. I think the real place to zero in on at this point is probably the size of the crop. So anyway you look at it, even considering those possible hedges about the stocks, we got a historically large bullish usage surprise this morning.
Yeah, it's a big one.
And there's no way around that. The only argument is really how big was it?
Yeah. I mean, when you think about how poor exports have been in the first part of the marketing, I mean, it's a huge feed and residual number.
Yep.
Huge. So we'll talk about the acreage a bit. USDA lowered planted acreage by 200,000 acres, and we got a harvested acres about 81.5 million acres. With 8% of the crop still out there, particularly up in the northern plains, I wouldn't be at all surprised to see those harvested acres come down before it's all said and done. And I'll talk about that a little bit more when we get to the balance sheet.
The question is, when are they going to do that?
Yeah, when?
Maybe the next WASDE, right?
We can do it in March, whenever we want to get around to it. The yield, I think, was a bit of a surprise to a lot of people, me included. The trade headed at 166.2, down from 167 last time, and USDA raised it to 168. Now, I'll get into state-by-state yields here in a minute. I mean, they have their procedures and the way they go about doing their yield, and you just got to take it at its face value. They've got a process. It seems hard to believe, Scott. I don't know how you feel about it. When we go state by state, I think it gives a better idea of what I'm thinking about here. But we did have a tough year. It's still a trend deviation of 5.2 bushels below what we would expect from trend with all the late planting and all the issues we've had coming into harvest. So it's still down, but when you really think about it, a 168 with the kind of year we had is a really impressive yield for corn.
Yes.
And it is something to think about, especially if those of you that like forecasting yields, about where you want to take your trend from. Here's where I'm going to spend a little more time talking about yield. And this is from the previous year. But from November, like Iowa at 198, they were at 192 in November, bushels per acre. So they went up 6 bushels an acre. Now, those of you in Iowa, that may be true, but that's not what I've been hearing out of, I mean, decent, but to raise it 6 bushels from the November.
I mean, in essence, what the NASA is saying is that the statewide average yield in Iowa was very close to 200 bushels an acre.
Yeah. Yeah. I mean, they dropped South Dakota 6 bushels. They dropped North Dakota 1 bushel. Illinois got raised 2 bushels an acre. Indiana got raised 4 bushels an acre from 165 to 169. And Ohio raised 1 bushel. So here in the Eastern Corn Belt, where we've been seeing a lot of trouble this year with planting and all other issues, all 3 of the states over here in the Eastern Corn Belt went up, with the exception of Michigan that went down 2 bushels from November. So, yeah, I'm looking at the 168. It's down 8.4 from last year. Iowa going up 6 bushels an acre that surprised me. I don't know about you from Iowa, Scott. Does that surprise you?
Yes, it did, because that's getting really up there in terms of, I haven't looked exactly where that is historically, but that's one of the top yielding years ever in the history of Iowa. And it was definitely a better year than Illinois.
No, yeah, totally.
Totally understand that. But was it that much better? Was it 17 bushels an acre for the whole state better? I don't know. I don't know when we'll find the final answer out now, because these are supposedly the final estimates.
So when we look at the January yield from November, it's up 1 nationally. And you see over the last few years, they've been revising down quite a few years, but when they do go up, it does go up. So maybe Iowa's yields were at 198. We'll find out. Oops. Well, overall corn production was at 13,692, and that's basically on the yield. The trade was at 13,513. And when we think about production in general, how it changed from November, it was only up 31 million bushels, but that's still a small part of that surprise we saw from the use standpoint, particularly with them changing the Sep first ending stock. So we get into these numbers a little bit deeper. It's going to come down in 1920, I think, if we want to see if these production numbers are correct. It's going to come down to the trade deal, it looks like. I'm going to have to talk a little bit about this, folks, so it'll take a minute. What you're seeing here is the actual dollar amounts to China in the previous 3 years, and for 2019, it's only through November. And in 2017, that $24 billion that you've heard tossed around, and that the administration's talking about doing $16 billion more than that, which just so happens to match, farmer payments. I don't know if that's a coincidence or not.
It's a pure coincidence, Todd. Pure.
In the first 5 categories, soybeans, forest products, and we don't often think about forest products as being agriculture-related products, but they are in the numbers. Fish products, cotton, and hides and skins were 77% of that $24 billion. Now, with the trade war in effect, we saw in 2018, it went down to $13.2 billion. And then through November, which is the only official data we have right now, it's at $14.6 billion. I think you could probably see us doing $16 billion in ag trade once December numbers are out to China. So for us to even get to say $30 billion in 2020, we'd have to raise value of exports $14 billion from 2019. And we start digging in the numbers a little bit. That $12.2 billion we saw in 2017 in soybeans, over half of the $24 billion was a little over 1 billion bushels. Now, could China do 1 billion bushels in 2020? Sure they could. right? You look at those coarse grain numbers, almost all of that sorghum. Could we see a bump in sorghum exports in 2020 under a trade deal? Sure, I think we could. You look at those corn numbers at 152, that was 32.5 million bushels. Now, China said they're not going to go over their quota under this new trade deal. That's somewhere around 285 million bushels. Would they import 285 million bushels of corn? They might. The problem is we have no idea what's in the text of the agreement. We're supposed to find out next Wednesday when they sign it. And I have an opinion, and Scott may have it. The wording is going to matter to what the Chinese agreed to. I haven't heard them say they'll take $40 billion worth of ag products. But I would like to say that even if they went back to 24 billion, that would be great. Right? If they did 30 billion, we should throw a little party in all probability, because that's a lot of ag products.
No, I mean, like I said, I think that, I'm skeptical of even the 30 to 40 billion of the 30 to 40 billion dollar targets, but someplace between 25 and 30 billion, if you really got there, would likely cause a bit of a mini boom in terms of demand for U.S. ag products. Now,
Yeah.
what the net will be, we'll talk some more about that, but undoubtedly, if that level of purchasing is real, I mean, if that's really going to occur, that will have an impact.
Yeah. And I expect a lot of meat to go to China. That pork and pork products, mostly frozen cuts and everything, that $858 million there, that was about 435,000 metric tons. I think in 2020, USDA is looking over 3 million tons of pork products to China. Will that come to fruition? That implies, probably 3 times what they're going to do in 2019. Is it feasible? Sure, it's feasible. But to get to, say, 40 billion is going to be a pretty big lift when we think about it. So let's think about that. And here we go. This is what you're seeing here in the first columns, the USDA forecast for 2019-20 they just came out with. You see the production numbers we've been harping on about, the change in the beginning stocks. They've got feed and residual at 55.25, ethanol at 53.75, and exports at 17.75. Now, when we're doing our forecast, I'm still, and I think Scott is as well, a little bit bullish on the production number. I could see more harvested acreage coming out of corn really easily, or yield going down, or some combination of both to get us at a lower level. One of the reasons I'm saying this is when you look at cash prices for corn, it's reflecting that. I don't think it's reflecting 13.7 billion bushels right now.
No.
And that's everywhere. That's not just.
That's right. We've got at the country 10-cent under basis here in the Eastern Corn Belt or better. And in the Western Corn Belt, which usually sees this time of year some pretty poor wheat country basis levels, it's 25 cents or better.
Under.
Yeah. And so those are really strong basis levels that seem to be signaling that the total availability of corn is not consistent with, almost 16 billion bushels of supply.
All right, we got to pick up the speed, Jim's telling me. We're already halfway through this thing. So when you look, like we said, we think that I think that feed and residual number is reasonable for a projection for the 2019-20 marketing year. Where I'm different is ethanol. Now, this 5410 is assuming we see an ethanol pickup in exports to China. And, if we did 100 million gallons of exports in ethanol in the last half of this marketing year, that might be too much. It might be a little conservative. I know there's a lot of hope for that out there. We're talking about 5410 in ethanol crush. Exports, I've got it going up. I don't think China is going to import 280 million bushels between now and August of corn, but I think you will see them buy some. This may be too conservative an estimate under the trade deal, but I don't think it is based off of where we're at. So we got a little bit higher consumption total than USDA, a little bit lower ending stock, putting us at about 11.4% stocks to use. Now we're saying an average price of corn at $4. Well, we've already had 4 months of below $4 corn prices. So it means for the last part of the marketing year, depending on how much, and I think a lot's yet to be marketed, we'll see stronger prices, basically. The big question, there's a lot of big questions today, but another big question is how many acres will we plant in 2020 in corn? I'm estimating around 92.1. If you look at USDA's long-term projections, they're at 94.5. It could be anywhere, but I think the acreage is going up. And I've got yield projections at 177.4. So we're going to see, in all probability, barring some kind of production problem, a much higher supply in the 2020-2021 marketing year.
Yeah, I would just point out that we've got our beginning stocks in that column.
Oh, yeah. Yep.
It should, instead of 16.
Yeah, it should be 1623. Sorry about that.
Doesn't really matter. The ending stocks are going up.
They're going up. They're going up. And we got some projections here that I use for when I try to do these long run projections. That's just scientific wild guesses in a lot of senses because so much can happen between now and then. But my main message about corn is we're probably going to see ending stocks going up, and it could be considerably. So we're sort of in a place right now where you may see corn prices on old crop, stronger basis, and maybe some positive moves in futures, which sort of points toward cash and delayed pricing kind of marketing strategies. But it may behoove everyone out there to think about doing some pricing on 2020 corn, maybe locking in if we get some kind of bump out of this trade deal, putting a floor under some of those corn prices for 2020. Because once that March prospective plantings report comes in, and if it's really, really bearish on prices, you'll see that reflected in December corn prices, which I think currently are a little above $4. And here in Illinois, we're seeing a harvest basis about -30, which is what we typically see.
I mean, an ending stocks for the next marketing year of 2.5 billion is not out of the question.
It's not out of the question. So we'll move on.
All right. Soybeans. Fortunately, on the soybean stocks, I can go through this really quickly, Todd. It's not nearly the fireworks as there were in corn. The trade estimated 31.86 for the D1 soybean stocks. They were a little bit higher at 32.52. The actual level of the bearish or negative usage surprise wasn't as large as the difference in stocks because of the difference between trade and the revised 2019 crop size for soybeans. So we had a pretty small overall usage indication. Pretty much you could say we really didn't learn anything new from the stocks report for soybeans usage. So with that, I'm going to turn it back to you.
All right, sweet. So we have a planted acreage of 76.1 million acres. USDA lowered planted acreage 400,000, and they lowered harvested acres 600,000 acres to 75 million acres. And I think that's reasonable. Now, there's still 2% of the bean crop out there yet to be tabulated, but it's nowhere near the margin that we saw for corn. USDA's yield projections at 47.4, which was up half a bushel from November, and almost a full bushel above what the average trade guess was, 46.6. So when we're thinking about overall that trend deviation, if we use that quadratic trend of about 1.4 bushels below trend, and which makes sense in the kind of year. Actually, the bean yields were still pretty good despite all the trouble in the late planting.
I mean, particularly if you think of soybeans, how late they were harvested.
They were very late.
Some of them were frozen. We had freezes. On particularly some of the late planted stuff that stunted the maturity of the crop. So overall, still again a really impressive yield.
Yeah, it is. And you go state by state, most of the corn belt's down from last year's huge soybean crop. Illinois is down at 54. I mean, that is up 3 bushels an acre from what Illinois was projected at in November. And Iowa's up 2 bushels an acre. It's sort of similar, but nothing as dramatic as what we saw with the corn yield changes state by state. When you look at the change from November, I said it earlier, it's about 0.5. This breaks a running trend of January numbers being lower than November. And we're sort of starting a little trend of actually yield revisions as we move through the marketing toward the end of the marketing year. Hopefully that doesn't continue. Production was at a 3.558 billion bushels. You know, the average guess was pretty close to that 3.512. Nobody was really surprised. So the production changed from November, just 8 bushels more than what we saw previously. So we're going to get it in. When we get to this balance sheet that we've tabulated, 2019-20 USDA forecast, they changed the acreage, they raised the yield a little bit, they've refigured the beginning stocks just slightly, and we're at a 4.5 billion bushel supply number. Crush stayed the same at 2.105 billion bushels, and so did the export number at 1.775 billion. And the seed numbers right there. So we got a total consumption from USDA about 4 billion bushels and a carry out of about 475, and they're projecting $9 price. And Scott and I talked about this a lot. My yield projections for soybeans were lower than this, but it was hard to say with the way it got planted late and the way the harvest went in. Right now, I'm taking USDA at their word on these production numbers. They do as good a job as you can do. And so I think the crush, we're on pace for that crush number, particularly with stuff going on in Argentina. The big question, and we talked about the trade deal, is this: how much will exports go up for soybeans under this trade deal? I could talk about this for a long time, and this may be too conservative for the 1920 marketing year. After the trade deal, I've got about a 35 million bushel increase right now. Folks, you got to remember, it looks like Brazil is going to do above a 4.5 billion bushel soybean crop this year. While we've seen stronger Chinese buying through the first part of this marketing year, we're actually still below last year's pace in soybean exports when you look at total commitments from sales and stuff that's been sent already. I think you could see a lot of substitution. What we've had under the trade deal is, as China's gone away, as we move through the marketing year, particularly later in the marketing year, we've picked up what were traditionally Brazilian customers. And if China starts aggressively buying soybeans from us, and I expect them for this marketing year to sort of revert to what they normally do under the trade deal, I think you'll see some buying right after the trade deal is signed in all probability as a good faith something, right? But or sort of revert to what they normally do in the second half of the marketing year. And we could probably see some of what we've been doing to other countries mitigate a little bit. So this may be conservative, but I still think we could see exports go up. So we're looking at a little bit higher consumption and a lower ending stock, you know, with the 9.10 price. Now we've seen higher prices than that for soybeans in some places here in Illinois, particularly at processors. If you had the opportunity to market the processors, much like corn, we've seen a strong soybean basis, and it's getting stronger. And much like corn, the same things I said about marketing corn, I believe for soybeans as well. The question is, how many acres in 2020 will we plant for beans? I can't imagine we're going to be able to take out over 12 million acres again by prevent planting corn and get back around 76 million acres. Wheat acreage is down. Winter wheat plant seedings were down today. We may see more spring wheat acres. By all accounts, cotton acreage may be down. So when you start going crop by crop, if we're going to plant between 317 and 319 principal crop acres in 2020, like we've been doing over the last few years, it's coming back to corn and beans, somewhere in that 178 to 180 million acre range. So much like corn, I expect bean acreage to go up. We could have that, you know, depending on, I've got a 50.3 yield there, but I would not be at all surprised if we saw, without any weather problems, really good bean yields next year. Right now, I'm just sort of, I don't know this far out. And Scott, you can talk about this as well, but I don't have a lot of faith in this trade deal holding out for a full year, to be honest with you. I want it to. I wouldn't be surprised if it didn't. I have a feeling the Chinese are going to buy just enough to keep the trade deal alive. when you consider the issues with African swine fever, and I don't think they're going to walk away from diversifying their supply chain in soybeans at all. So we'll see. We'll see as we move through this year. So I think hedging and putting a floor under some of those 2020 beans is a good idea as well.
I mean, even if, the point I would make, 2 points on the balance sheet here is, even if we're wrong in our skepticism of the follow-through effects of the phase one trade deal on soybean exports to China, we're probably not wrong by more than, say, 200 million bushels.
Yeah.
And yes, so that would lower the ending stocks to perhaps 400 million, which, would be a better scenario. But it's, it's going to take that kind of, really robust exports to China and or preserving some of our customers in the face of a big Brazilian crop.
That's correct.
The other thing I want to point out is that, well, both Todd and I were a little surprised by the yield that the USDA came up with on soybeans today. Remember that there's only 2% of the soybeans were in the field.
That's right.
When the survey was taken. And secondly, we don't have a comparable signal from the stocks report that something could be amiss with the 2019 soybean number.
That's correct. I forgot that idea that we got this big disconnect between the stocks and the actual production numbers is not there in the soybean.
No, and so we're just basically going to accept, as we usually do with the January, we didn't really emphasize just how unusual it is for us after the January final numbers are released to pretty much just accept them and take them as given. And that's what we're doing here in soybeans.
That's right.
And then the last comment I wanted to make, just to emphasize, in corn, by contrast, the stocks and implied usage surprise was so big that you have to do something.
Something has to be done.
You either have to raise the feed and residual even more than the USDA did on corn, or you have to lower production in your balance sheet, or some combination of the two. And we chose to be relatively conservative in terms of how much we dropped acreage and yield and then total production beyond what the USDA did.
Now, I will say this, getting back to the stocks number and the feed and residual calculation, USDA's current projection is we about 47% of feed and residual use in the first quarter. If you thought we have a lot of hogs on the ground and a lot of cattle in the lots, a lot of poultry getting placed, we saw a really strong feed use in the first quarter, and it may fade as we move through the rest of the marketing year, then that makes a little more sense to have 55-25 with the production number, but it's still a huge number.
Yeah, right. That we're just kind of chipping away at the margins there, rather than we had the surprise exists. It's a concrete number in corn.
That's right.
And then you have to figure out, well, what are you going to do with it?
Yeah, what are you going to do?
Time to do with questions. You get the first one, Todd.
Okay.
Keep sending in those questions. We did get through it. We still have over 20 minutes for questions.
We did it.
We did it.
I blew through the yield stuff there. The majority of Iowa had very good yields. Many yields were as good or better than last year, other than southeast corner of Iowa. Well, that's good to know. And apparently it's the third all-time highest yield in Iowa.
And that makes sense. And, to me, that's a great observation, an interesting observation, because what we're, if you just ask us what we really think, someplace, somewhere, that this January supposedly final estimate on corn was just too big. That's to us the most logical way to fully reconcile the implied usage surprise that we saw.
That's right. And
I don't know if it's Iowa or where it is,
Indiana,
but
Eastern
there
Corn
seems
Belt.
like we're counting too many bushels of corn somewhere.
It seems that way, particularly when you look at cash price. So we'll see what happens as we move forward. Can you throw in a comment about wheat, soft red, and hard red winter wheat? We've seen really strong wheat prices recently, riding up the trade deal as well. We could see, and China said the same thing about wheat. They won't bust through their quota. I expect them maybe to buy some. We have seen projections of stronger feed use in wheat, which makes a lot of sense with the number of livestock on the ground. So there's some strength there in wheat. I would say, much like wheat, it's not like we're running out of wheat in the world. We've had some of the international producers, particularly in the Southern Hemisphere, saw some production setbacks this year. We got a lower winter wheat seedings this year. I think it's about 500,000 acres. Well, could we see more spring wheat acres this year? Sure, but how many would that really be? And so we could see some strength, but I think that's going to be tied to the trade deal and corn moving forward. And I think if you're in Southern Illinois and you planted some soft red winter wheat and you're looking at those July prices, start thinking about it. That's what I think. So how's that for something?
That's something on wheat. I'm going to take this one. The basically observation question is that our export projections for soybeans show no follow through by China in 2021 for buying U.S. soybeans, question mark. Isn't this a little counter to all the White House announcements? And the answer is yes, it is. And that reflects, again, something that's very speculative on our part, but just, being really straightforward out there about our position is that, we think there's a reasonably high chance that the trade agreement will blow up sometime in the next year. And the reason that we take that position is because of the difference between, I think, how the U.S. Trump administration sees the agreement and what appears to us the way that the government of China views the agreement. And, that's not an issue if, they're seeing it as a few $billion difference.
Yeah.
That's kind of common in politics. But boy, you saw the data that we presented. It'll be a big change to just get back to the $24 billion from 2017 and 2020.
Yeah.
And, the White House pronouncements are, these are going to be massive, massive purchases that are great for the U.S. farmer. And which, by the way, Todd and I would love if that's true. We're 100% behind that. We're not skeptical.
I'd be tickled pink if that happened. Yeah.
But, we're seeing no follow-through confirmation by the Chinese other than we're not going to do anything than other what the market dictates. We're not going to go above our quotas that we've established. That's the language that they're using. So, there might be kind of a burst of optimism right after the agreement is signed and the dollar amounts are in the agreement. But we're just basically skeptical that China will really buy $30 to $40 billion, certainly $40 billion worth of agricultural goods in a calendar year. And there could be lots of different ways. Maybe they'll spread it out. They'll do forward and spot sales. And I don't know how this is all going to work out, but I think there's a real chance that the two sides are far enough apart on what the terms of the agreement really mean, that when China isn't really buying that much, at some point there could be a real disruption.
Yeah, and I've said it before, and I talk a lot. I just hope the administration doesn't make perfect the enemy of the good. If they're buying and they're buying at a higher clip than they have been, I'm fine with that for a while, right? But if you're saying, look, you're not buying at the pace we want you to, and I don't know if that'll be the case, right?
For example, I think, a practical goal that I think is really achievable is something around $30 billion could feasibly be done with increasing in corn exports, some ethanol, a lot more meat products, maybe some more forest products, getting soybean purchases back up to where they used to be. It could end up all adding up close to $30 billion. But, even getting to that target is going to be a big change in their buying patterns from 2019.
Yeah, and I mean, we're talking about corn and soybeans here. If you go product by product, I mean, billions of dollars of forest, logs and all kind. If you really go in and look at all the stuff they buy, it's unreal, right? In various amounts. Fish products, like the lobster guys, the salmon guys, they're going to get a bump out of this. We don't think about that as my tree nuts. It's high-end products, right, that you could see coming out. So I don't see them walking away from the agreements they've made this marketing year with Brazilian sellers and Ukrainian sellers, and particularly with their hog herd where it is. It may not be the boom in soybeans. I really do believe they'll sort of revert to their normal soybean buying pattern in the second half of the market, which is still way better than what they have been doing, right? And it could be much more supportive. So corn, they said they won't go over their quota, so we know the most they're going to do is around 285, and so that would be great if they did buy it all. But
that would even help further tighten up the corn balance sheet for 1920.
Well, is there going to be corn to, it would get really tight if they started doing that. So I think there's a lot of things they can buy, and the meat in particular would be supportive for us. We'll send corn and beans through boxes of meat and carcasses. That's fine.
Probably a lot of whether they can make even 30 or the low 30 billions will depend on just how much meat that they buy.
Yeah.
Because that's the value that can increase probably the most rapidly.
That's the most rapid. Yeah.
Here's one for you. Your projected price for corn and soybean signals another tough year in 2020. What's your response to that, Todd?
It could be, right? I just don't see the acreage leaving those crops.
Right.
That's the problem, right? Who's leaving and going into what exactly? Because they're not going into winter wheat. Doesn't sound like they're going into cotton. Small grains, we may see a bump here, but altogether, we'll maybe see more sorghum acres. But all those small grains at 12 million acres, so maybe a little more CRP this year, possibly. But it looks like the acreages are going up.
And that's the big part of the supply.
That's the issue, right? And
so the only way that it's not the 2021 marketing year is not tough on price is if we've really underestimated the demand effects from a trade deal with
That's
China.
Right. Unless
that literally is what we would see, that or a big drought here in the Corn Belt.
That's correct. Some kind of production problem, one of the major producers. And, we still got the safrinha crop in Brazil to come in corn. You could see that thing go. I think corn production may be a little lower than USDA is currently projecting in Brazil. And also they just exported. I think their market's pretty tight domestically. So I think there's space for stronger corn exports in the second half of the marketing year, independent of the trade deal. So if the trade deal comes, it could be stronger, but it would require a really strong demand kick or some kind of production problem at a major producer if we're going to plant the kind of acres I think we are.
Here's a question, a very interesting one. With your 1920 corn balance sheet and your 2021 corn balance sheet, do you see a big inverse in the CN20, CZ20 spreads? Let's see. I know ZSDN is
In July, isn't it?
July. Yeah.
Yeah.
I was thinking more like March Ds, but yeah, I think that I will not be at all surprised to see, given just all the uncertainty we're dealing with about what's really out there for supply. It's not going to surprise me to see inverses continue to build in the market as the market basically signals we need more grain now.
Yeah, you could see a pretty strong inverse pattern show up in that spread, particularly if we end up expanding corn acreage even more than I think, or even more than USDA thinks.
Yeah. Next question. I'll take this one. Once again, what was the adjustment that needs to be made to the corn balance sheet? Was it beginning stock? Well, this kind of ordinarily we take the stock number as given and then ask, given the stocks and what it implies about usage, then we adjust feed and residual use up and down.
Yeah.
That's the normal process. But one of the things that made today difficult was the USDA changed our base, which is the beginning stock in the calculation, which in my experience has been unprecedented in corn.
In corn.
But the big picture is, given the data that we have in front of us now, it's implying that we either need to increase usage on the usage side of the balance sheet, or we need to lower production. Now, will USDA ever recognize that they need to lower the production? Ordinarily in corn, you would say no. We usually simply let any over or underestimation of the corn crop go on almost forever until maybe a census revision. But they actually lowered the corn crop for 2018 in this report today too, as well. So it's going to be interesting to talk to USDA officials and then ask them what is their methodology now for revising corn production figures in light of stocks reports and the evolution of feed and residual use as we go through time. Normally, we didn't expect any revisions like that. But that's the big picture. Going forward, it'll be very interesting now that March 1 stocks number is going to be really important because that'll be the next, so that'll give us another reading on, maybe it was measurement error. Some of this was measurement error in the D1 stocks. Maybe they were just too low. The USDA chopped the yields for the corn that's still in the field too much.
Yeah, maybe.
Don't know. So the March ones will theoretically give us a much cleaner measure of stocks.
Yeah.
But of course, some of the corn may still be in the field March 1st. If there's 8% on 1st, there's going to probably be a couple percent or more on March 1st.
I hope.
But anyway, that's the issue on stocks, is that we had, the data say we were using at such a rapid rate and at such a large quantity that doesn't seem realistic. So we have to adjust something somewhere else.
Yeah. Let's take this one. Talk about ethanol. What does that demand picture look like? Well, we've seen a recovery from what we saw early in the market. We've been doing well over 1 million barrels a day for the last couple of months, month and a half. But we have seen profit margins deteriorate from ethanol plants over the last few weeks. I think when you look at gas demand in general, it's basically flat to slight increases. So we're still going to get around 10% in that. So I don't see any real growth in that over the next year. So really, if we're going to get any growth in demand, it'll be in exports. And by my calculations, through the first quarter of this marketing year, we're lower than last year's pace with ethanol exports. And a good chunk of that was lower exports to Brazil. And so it comes back to China. Will China buy ethanol? Well, there's a couple things about will China, but I think China will buy ethanol, or else I wouldn't have changed my ethanol numbers. Just how much is the question. They announced recently that they weren't going to enforce that 10% ethanol mandate, which really didn't come as a surprise to me because there's a couple reasons. One, they used to have a big pile of corn and now they don't, supposedly, if you believe their numbers. Two, they didn't do jack to build ethanol production facilities. They just said it and never did anything about it. And so I think, them rolling back that mandate may take the top end off of what a lot of people in the ethanol industry thought could be a possible real, demand boom in the export market. But I still think they'll take some. It's hard to say at this point, but if they are going to shoot for 30 to 40 billion dollars, I think ethanol will be in the mix. And I reflected that in the balance sheet I put in there.
All right, how about this one? If you look at soybean prices as reflecting global supply and demand, isn't it reasonable to conclude that the current soybean prices are the new normal and U.S.-China trade issues will only have short-term impacts?
Well,
I think what the person is saying is that, $8.50 to $9 cash soybean prices are the new normal. Do you think that's what
I think that's what they're saying.
I think so too. And I don't think we would probably disagree with that too much, would you?
Not too much. We've seen Brazil expand production significantly and Ukraine starting to come on. I would expect as time moves on over the next 4 to 5 years and China gets out of this ASF problem, their hog herd will expand and demand will pick up. The question is how much of that market share will be ours. I doubt we're going to end up reverting back to what we were before. We don't have a shortage of soybeans in the world by any stretch of the imagination. And so, yeah, we could see these lower prices being sort of a new normal.
Yeah.
Which means, marketing turns into, good cost controls and marketing matter.
So this one, if the trade deal with China blows up, will the MFP or a similar program function in 2020? We guess that depends on whether it's before or after the election.
That is cynical. I enjoyed that. Yeah. That's my kind of cynicism right there.
But yeah, my personal view is I would put at least even money, even if it was after the election, that some kind of MFP would come back if the trade deal blew up again.
I don't think you'll see it in 2020 unless this thing just blows up immediately, which would be insane.
That's true. Yeah.
If they don't sign that deal next week, get your pitchforks. What is going on, right? But so I don't see it in 2020. After the election, I think, who's going to be in office, right?
Yeah. Says, what would you see as a high price for corn and soybeans for the 2020 calendar year? I presume I don't know if it's marketing year.
Well, it depends on where you're at.
Right, but let's just use your U.S. average prices.
I usually sort of think about it as Illinois. Here in Illinois, and you can adjust. This is just how I think about it because it's not that I don't care about everybody else. I just care about Illinois more. We're seeing prices upwards of $4.20, $4.30, and when you carry out, I think you could see a really strong basis into July, particularly if the production numbers are down. I think a lot of corn's going to start getting moved here in the first quarter of the marketing year, which might come in on basis a little bit. But I think there's opportunities out there. I know I've heard people talking about free delayed pricing, and there's been a lot of pretty competitive bids on the March window and beyond. So I think you could see it in that. I think you could see in that 420 to 430 range on corn. Beans, I think we're going to get a bump out of this trade deal, independent of what the text says about it.
And what we think.
Yeah. And it's just how big a bump, right? And then what does the follow through look like? I think you may see some of the higher, no, now I don't know if you're talking cash or 2020 harvest. I guess you're talking cash. I think you could see some of the higher prices, depending on, if we don't have any production issues this summer coming up.
Yeah.
And the levels we're talking about, I really want to see what this trade deal says first.
That's right. And we have to just recognize here, we're all just shooting in the dark about exactly what that trade deal means. We don't have any better information other than just our own opinions than about, and so we're all going to have to, I think, pay attention to two things. What does the text actually say? And then watch very carefully the follow-up statements by official Chinese representatives about what those mean.
Yeah.
And, like I said, I think both Todd and I would love to be wrong about our skepticism.
Right.
And we'll leave it at that. One last thing I want to cover before we sign off. It says, I like this question. When will you have the opportunity to discuss numbers with the USDA?
Never.
Maybe they'll be calling us after this webinar.
Yeah.
But here's the question, and maybe there's folks out there that will be in contact with people at the USDA. What I'm most puzzled about is historically, for as long as I can remember, the USDA has never altered quarterly grain stocks numbers in the short run. There's some long run changes that can be done at an annual level due to the ag census every 5 years, but something from one quarter to the next. And I'm really puzzled by what new data did they have that indicated that the corn ending stock should go from 2114 to 2221 in 3 months. Historically, we've always argued that since we don't have independent measurements of feed usage for corn, that once you get a stock number, there's no way to know whether you should adjust, given a stock number, should you adjust production or should you adjust feed usage? You don't know because you don't have an independent measurement. There's no feed report.
Yeah.
And we have that in soybeans, and so that's why we adjust it when we get the set stock number. We don't have that in corn, and so we've always argued, and it's always been my understanding, that's why we never mess with the corn quarterly grain stocks numbers. And then just out of the blue today, NASS announces we looked at balance sheet categories and said, well, we're going to raise the ending stocks from the previous quarter, the ending stock, which happened to be the ending stocks for 1819. And I'd like to know what new data they now possess that gives them an independent basis for making those kinds of adjustments. And if that's going to be a pattern in the future, we all need to know about it.
Yeah. Usually they just let it roll in the feed and residual, right? And everybody knows it.
Yeah.
Right? It's a huge residual this year, know, and they didn't do that. They raised ending stocks and lowered the 1819 feed and residual numbers.
So that's in short, that's our question for the NASS officials from USDA. So with that, we've over by just a couple minutes. We really appreciate everyone that has registered and tuned in to today's webinar. Again, we really want to thank our sponsor for this webinar, Compeer Financial. And just to remind you that our going too far there. That our slides and a video for this webinar will be up on the farmdoc website. And finally, I want to just have everybody take a note that we're now going to be doing monthly farmdoc webinars. So there'll be one in February and all future months. And so be looking for the emails and social media advertisement for those webinars. The next one will be coming up pretty soon in February.
Yep.
So thanks again, and everybody have a great weekend.
Yeah, have a good weekend.